In this video, we'll define volume, show how to read it on a chart, and explain how some investors can use it to confirm trends. Volume is the quantity of a security that trades between buyers and sellers. Volume is measured on a trade-by-trade basis, totaled over a given time period, and even calculated across an entire market. In the stock market, volume is expressed in shares. A share of a stock represents partial ownership of a company, hence the term share. A share is the basic unit that describes the quantity of a stock and other securities. Volume is the number of shares exchanged in a single transaction. For example, if a buyer purchases 200 shares of a stock from a seller, the volume of this transaction is 200 shares. Countless transactions just like this take place throughout the trading day. The volume indicator keeps track of all these transactions and total the number of shares traded over a given time period. The volume indicator is usually displayed at the bottom of the stock chart as an histogram. Each bar of the histogram shows the volume of trade for a given time period. For instance, if you're looking at a daily chart, each bar of the volume histogram represents the total volume traded per day. In the more advanced markets, if you're looking at a short-term chart like the 1-minute chart, each bar of the volume histogram represents the total volume traded per minute. Volume is often averaged over time, particularly during the daytime period. This is called average daily volume. Some investors compare today's volume to the average daily volume over a number of days in the past. Investors typically use 20 or 30 days to calculate the average daily volume, although any historical range can be used. Comparing today's volume to the 20-day average, for example, can help an investor judge the validity of a move in the price of a security. Some investors who use technical analysis believe that moves in price higher than the average volume are more valid than moves and lower than average volume. For example, if a stock breaks above the daily resistance on higher than average volume, some investors believe that this is confirmation and the stock is more likely to move higher. The theory is price move higher with support of many investors buying, which is what the higher than average daily volume reveals. Therefore, higher than average volume lends to credibility and can confirm price moves. Conversely, price moves on lower than average volume are thought to be less credible because they lack the participation of many investors. Some investors might view a break above resistance on lower than average volume with skepticism, thinking the break might be false because it lacked participation. Volume reveals how many investors participate when a security price changes, and the more participation, generally, the more credible the move. That's it for now, guys. Thank you for watching. See you in the next video.